Hi everyone, welcome to episode 9 of Coffee with Z, and we're going to be doing Q&As going forward where people ask us questions and we give answers from the questions from the last week. So got Alfie's going to shout them out.
Okay, so question number 1 is, does your brand help you grow your business?
And how we're going to set these up for the structure is we're going to talk about business, tax, property, and then some tax around property. So this is a business growth question. From my perspective, if anyone follows us on social media, it's all about brand, in my opinion. And here's all opinions. But if you don't invest in your personal brand first and your business brand, how do you expect people to trust you and buy from you? And that's what happens in the longer term, because people start following yourself and they then say, when you've got a problem, this is the person to go and see.
Okay, so great. Next question is, do you have to charge VAT for a disbursement?
So we had this question recently. So we had a client who's getting incurring an expense on behalf of their client. They claimed the VAT back on the expense, provided they got a VAT receipt, and then they wanted to charge the client. So they have to invoice the client. And because they invoiced the client, there is VAT on there because they were VAT registered, because that is the normal way of doing this.
Perfect. Okay, next question is, should I buy a second-hand car through a limited company?
This is a great question, because I had a client who didn't want to buy a brand new one, but they still had a significant cost to buy a second-hand one. I have to caveat this answer because we're going to be focusing purely on corporation tax. And what the impacts for corporation tax are, if you buy a second-hand car, you can't claim the actual value of the car, even if you buy on HP, against your corporation tax. And therefore it also triggers off personal tax. So therefore it's better, in my opinion, to buy it privately and charge your company mileage, which is currently at 45p per mile for the first 10,000 miles and 25p after that.
Great. Okay, so a question for property investors now is, if I'm buying a freehold block of flats, how should I structure this?
Really detailed question, and we'll probably do a bigger answer on this, but I'll give you an overview. For me, if you're buying a freehold and you're going to do a title split, I create leases, I will buy it in a group structure. One subsidiary buys the freehold initially, and then you do the title split and assign the leases to another subsidiary within the group. And if you do it tax efficiently, or properly I should say, with the right advice, you won't end up paying stamp duty, land tax, no corporation tax, and potentially minimising or avoiding VAT if it's a property that's elected to tax.
Awesome. And the last question is from a developer, and it's, if I'm a property developer, can I claim entrepreneur's relief?
So property developer, really important and great question. I get these asked a lot. Property developers are people who buy property with the whole point of selling them once they've added value, and therefore they tend to be recorded as stock, and that's what you become a property developer. Yes, provided it's a trading business, which this will be, and you've got it for at least 2 years and you meet the shareholding and director requirements, you can then claim entrepreneur's relief, which is now known as business asset disposal relief, tongue twister, and therefore you only get charged 10% personal tax, not 20% when you dispose of the shares.
Amazing. I think that's just about it then for this week.
Perfect. If you have any more questions or comments, please do comment below or ask them, and my team will pick those up and we'll put them in the next episode of Coffee with Z. Thank you so much.